As our morning call. Well, let's get going with our list of top stocks to watch this morning. As usual, it's a long list because we've got so many earnings that we need to analyze. So our team is standing by. Let's kick it off first up with Vivek on L&T. Vivek, tell us, I think more than the FY24 numbers or the Q4 numbers, the street is going to watch out for what they're saying for FY25.
That's right. So FY24 ended on a strong note as far as L&T was concerned. The management had guided, at the end of Q3 that they would be able to go ahead and beat the guidance that they had given in terms of the order inflow, the top line growth, and they managed to do that. Where did they miss out on expectations? The margins. So FY24 margins too was something that they missed. But first, let's take a look at the quarter gone by itself. Largely in line, a slight miss as far as margins was concerned. Revenues are coming in at close to the 67,080 crore mark versus our poll of 66,280 crore mark. Margins coming in at 10.8%. We had a expectation of close to 11.4% and profitability coming in at 4,396 versus our poll of 4,267 crore rupees. Now talking about the order book stands very strong. Order book at 4.75 lakh crore, up almost 20% on a year-on-year basis. Order inflows up 31% on a year-on-year basis. Order inflows in the year gone by was 3.02 lakh crore. Along with that, the company has also said that the order pipeline is very strong, $7.3 trillion for FY25 versus a $6.5 trillion for FY24. However, the management did indicate in the call that the ordering that they would receive may be slightly muted compared to the year gone by. So guidance check as far as FY24 was concerned, the management said that there would be 20% growth as far as order inflows concerned. They managed to go ahead and do 31%. That is very strong. Revenue growth of over 20%. At the end of Q3, they said that they would do high teens. And core EBITDA margin, they had given a band of 8.25 to 8.5, which they had trimmed earlier from 8.5 to 9, but they came in at 8.2, so that was a miss. Now, FY25 guidance, we spoke to them on the call yesterday. What did they say? Order inflow guidance seen at 10% on a strong base. That is something that's quite strong. Top line guidance seen at around 15%, again coming off a very strong base, that's quite strong. The only disappointment, and this is something that could cap the upside as far as the stock is concerned, is the margin guidance for FY25 at 8.25% versus street expectations of close to 9%.
Vivek, thanks for that. What's the order inflow growth number, Vivek?
Order inflow growth number for FY24 was 31% on a year-on-year basis. So that makes the base very strong. For FY25, on that, they are seeing a growth of around 10%.
Okay, and there's no disappointment there, right? I mean, that's in line with what? Because yesterday we had that Bernstein analyst who was saying that, probably because of the Saudi bit, etc., that number could be flat in FY25 over 24, but there's a 10% growth guidance there in terms of orders that L&T expects to take in this financial year. But TVS Motor is the next one. Vivek, thanks for that. TVS Motor is what we're going to focus on. Sudarshan has got details here. So good morning.
Morning, Prashant. So after Bajaj Auto and Hero Motor, TVS Motor 2 has reported earnings which are better than estimates and are significantly higher against the same quarter last year. Especially on margin, it has come at 11.3% and it's above 11% for third straight quarter. Revenue has risen 24% and EBITDA is up 36% year-on-year. In the analyst call, company has covered almost all the topics. Talking about numbers and growth, it says EBITDA will continue to improve quarter and quarter and expects two-wheeler industry to see a healthy growth led by rural market. On exports front, it continues to see some challenges in major African countries. And talking about electric vehicles, company says it has offset the impact of reduction in government initiatives via cost reduction and scale benefits. And on the launch front, besides several launches for two-wheelers, company will also be launching three-wheeler electric vehicle this year. Lastly, on the price increase, there was no price increase taken in the Q4, but in April, company has taken a minor price increase of 0.3%. So overall, I'm going with green for TVS Motor.
Okay, all right, Sudarshan. And, over the years, the margins used to be that 6-7% band. Now it's getting used to being in double digit, as well as the big market share gain as well that they've seen. Well, let's hop across to Vivek. He's here to tell us about Tata Power. Vivek?
Well, Tata Power, multiple moving parts over here. So just looking at the headline numbers, it looks like it's an inline set of numbers, but the internals are something that has disappointed the street, and this is due to the multiple moving parts over here. So first, let's have a look at how the quarter panned. Revenues at 15,847. The consensus estimate was close to 15,560, up 27% on a year-on-year basis. EBITDA, up 21%, but again below the consensus estimates of close to 2550 crore. Margins 14.7 versus 15.4. So again, that is one disappointment. Profitability largely in line with what the consensus estimate was. But here's the kicker, when you're talking about the internals, CLSA notes that the net long coal position that Tata Power has, because of the long coal position that it has in Indonesian coal mines versus, the coal that it imports for Mundra, is something that has hurt the profitability quite significantly. Quality of its results remains challenging, with a one-off dividend actually supporting the PAT. Goldman Sachs says that the coal biz profitability continued to contract, and the Mundra weakness could not go ahead and offset this particular development as far as coal biz was concerned on the back of the Section 11 continuing. They also say high valuations, risk-reward appears unfavorable.
Okay, all right, got that. Thanks very much, Vivek. We'll try and get more details and more color on these numbers with the management. Mr. Praveer Sinha of Tata Power will be joining us at around 9:50, so make sure you stay tuned for that. Well, that's Tata Power. Let's move to Piramal. Abhishek, how were the numbers?
Before the numbers, one of the key announcements that they have done, that is the listed parent entity, that is Piramal Enterprise, will be merged into Housing Finance subsidiary, that is Piramal Capital and Housing Finance Limited, in the next 9 to 12 months. So Piramal Capital is actually an upper layer NBFC and is required to be listed on exchanges before September 2025. So shareholders of Piramal Enterprise will get one equity share for one non-convertible preference share of Piramal Capital Housing. Coming on to Q4 numbers, it's a mixed bag. Business momentum has been strong, but P&L is on the weaker side. Disbursements are up 30.5% YOY and about 15.8% sequentially. AUM growth is about 7.5% YOY and a decline of 2.8% sequentially. Our wholesale portfolio has led to this decline. Otherwise, the retail portfolio share has grown both YOY and quarter-on-quarter. Asset quality has improved a bit, a 4 basis point decline in gross NPA ratio, but there is a huge dent in the net interest margin, which has declined by 100 basis points YOY and about 50 basis points sequentially. There are many one-offs in the P&L. Operating loss that they have reported is about 1,654 crores versus operating profit of 465 crore YOY and versus operating profit of 279 crore in the previous quarter. So provisions have declined by 20% YOY, but they have increased tremendously on a sequential basis. PAT, after adjusting for the exceptional gain that they had due to stake sale in Shriram Group. So PAT has come in at 138 crores versus loss of 196 crore in the previous year's same quarter and the loss of 2,378 crore in the previous quarter. Back to you.
Okay, Abhishek, thanks very much for that. So numbers a little subpar as compared to expectations. Now, this is an interesting story. Gold finance companies should be in focus today. Remember, RBI a few weeks ago had come out with restrictions on IIFL, and they'd one of the things they'd said is basically the fact that a lot of cash dispersal which was happening against gold was happening in excess of what IT rules allow them to do. Now, RBI, this is all source-based information, RBI has shot off a letter asking NBFCs and gold finance companies in particular to abide by this rule. So Manappuram, Muthoor, etc. should be in focus. But Ritu has gotten the story and she's here. Ritu, morning.
Good morning, Prashant. That's right. RBI has issued an advisory to NBFCs, specifically gold loan NBFCs that have a presence in Kerala, to strictly adhere to the income tax provision on cash disbursement, cautioning them clearly that no NBFC can disburse loan amounts in excess of that 20,000 cash limit, citing the IT rules which deal with this provision. Now, this letter not really coming out of the blue. If you recall, RBI recently took that action against IIFL Finance on its gold loan business you were referring to, where, among other reasons, the breach of cash dispersal limits was one of the issues cited by the regulator. Now, we understand that since that happened, several large players in the gold loan business reached out to RBI to see whether that 20,000 limit really had to be strictly followed, because it was not an uncommon practice to disperse much larger amounts in cash. So it is in response to that RBI's Department of Supervision issued this letter to NBFCs, including to Manappuram Finance, Muthoot Finance and others. Morgan Stanley believes it is a near-term sentiment negative. There may be a transient financial impact on gold loan NBFCs because of this, but overall it should be manageable.
Okay, all right, Ritu, thanks for that. Well, let's go back to Abhishek. He's here to tell us about some good news coming in for Bank of Baroda. Abhishek?
Well, RBI is giving good news. So like it gave to Bajaj Finance, it has given to Bank of Baroda as well. It has lifted the restriction on Bob World mobile application of Bank of Baroda. So bank is now free to onboard customers in the Bob World application, and bank can resume the onboarding of new customers as well. Just to give an alert, RBI had put restriction on Bob World in October 2023. So in 7 months time frame, these restrictions have been lifted. It could act as a positive catalyst for Bank of Baroda in trade today. Back to you.
These days, thanks Abhishek so much for that, Prashant. These days, I think RBI moves the equity market more than it moves the money market. Just a thought.
Absolutely, and they've been proactive, right? Now, more earnings. Vamakshi is here with that list. Vamakshi, morning.
Well, good morning, Prashant. Let me first start off with BSE. Well, the revenue saw an uptick of almost 31.5% on a sequential basis, and this was largely being led by the 51.8% growth that the company saw in the transaction charges. But the total operating expenses have actually surged by almost 40% on a sequential basis, and that is mainly on account of the provision that the company had to make for differential SEBI regulatory fees that stood at almost 170 crores for the company. Resultantly, we saw the margins contract by almost 507 basis points to 19.67%, and even the net profit, however, was impacted by higher effective tax rate due to shift to a new regime. So overall net profit was also nearly 1% lower sequentially. So overall not a good set of numbers as of now, impacted by the regulatory fee, the differential that they had to pay, and as a result expect the stock to open lower today. GSPL on the other hand is expected to open higher. Revenue was down almost 8.4% on a sequential basis. Lower tariffs impacted the revenue, but the volumes, however, saw a good surge. Volumes came in at 33.37 MMS CMT as compared to 29 in the previous quarter. Operating margins have also improved for the counter, coming in at almost 74.6%. The net profit and EBITDA, however, was flat sequentially. So overall, given the improvement in the operating margins and the surge in volumes, expect the stock to open higher today. And lastly, let's focus in on SKF India. The stock is also expected to open higher. They are seeing a nearly 10% growth in the revenue. The margins have also improved by almost 250 basis points, and the net profit has managed to surge by almost 43%. Other than that, the company has also announced a dividend of almost 130 rupees per share, which brings it up to a dividend yield of almost 3%.
Okay, got that. Vamakshi, thank you very much. So those are some more numbers coming in beyond the indices as well. Let's quickly recap then our list of top stocks to watch today. The ones that have positive news flow around them are L&T, TVS Motors, Bank of Baroda, GSPL and SKF India. Stocks with negative news flow around them are Tata Power, Manappuram Finance, Muthoot Finance, Piramal Enterprises and BSE.